Welcome back. Wednesday afternoon after an FOMC day. We pretty much got exactly what we expected. A little bit light trading heading into the into the announcement, and then decent, violent, unpredictable moves in both directions. Very rarely do we pick one direction and just go, and that's usually when it's a surprise. So what we're going to do is we're going to review the stocks that we see in the game plan here and really put into context what could have been done based on the bias coming into today. Now, very, very big thing, as we're going to keep harping on every single day. The bias of which side you want to trade the stock is by far the most important element. So we're going to first discuss which side, and then we're going to compare possible entry signals and or patterns with managing risk based on whether or not we want it to be long or short the stock coming into the day. So first thing we'll do is we start out with the market. We're looking at the SPY. You can see pretty clear here on the daily chart we have an inside candle. This represents 2 days, 15 minutes. So coming into the day, we knew we wanted to be long. Here's the opening price. We had some pretty decent back and forth in the morning. We had about, I don't know, let's say 2 or 3 different moves of 80 cents, but I wouldn't exactly call them readable. And that's really what you want. You want readable price action where you get nice, clean continuation moves, kind of like we had here yesterday. So you can see here's yesterday's high, here's today's low, here's the opening price. Whole lot of nothing going on in the spiders today. So we were in a very, very stock-specific market. And again, I want to call out the significance of the opening price. Better trades will be had when your long-term order flow is in sync with your intraday order flow. So the better trades in this case, wanting to be long, are when price is above the open. Okay, you can definitely look for spots to buy here because of the longer term order flow if it's below the opening price, but the purest, most amazing trades unfold when short term is in sync with long term, and short term in this case here means change from the open. So let's go right through the list. We're going to look at some of the bullish ideas from this morning. CYBR coming into the day looking long on this pullback. If you remember in the game plan meeting this morning, we said this opening and a test of the previous day's low would have been looking for a buy. We actually end up opening a little bit lower, and you can clearly see here the significance of the opening price. We were above it the entire day, so we did end up getting a long out of that trade, so we were looking on the right side there. Next we had First Solar, FSLR. Here's yesterday's close, here's today's open, and again, look at how that filters out, keeping you on the right side of trades. That's an amazing, amazing filter. Now, if you like this a lot, and you liked it coming into support from yesterday, as this stock started to pull back, you could have possibly used this short-term signal, even though you're below the opening price, as a spot to buy with yesterday's low as a stop loss. So roughly, let's say 30-cent stop loss. That's actually a pretty good stop loss for a $60 stock. If you did and got long, probably would have got stopped out for a flat there, or maybe that 30-cent loss. End up getting another entry here below the previous day's low. But let's think about what's going on here. FOMC announcement breaks the previous day's low and trading below the open all day. Probably would not have been the best idea in the world to take the second one. This first one you could definitely justify looking for it to go positive. It never does. So decent trade on a bullish stock that does not follow through. Very, very important there to quantify how good the trade was. Next we have Amazon. Amazon was actually above the open the entire day, and we actually talked about this morning. Pullback, we like it. Pushed through the previous day's low, immediately found support. Ended up staying above the opening price the entire day, but just never got that follow-through that you would expect after this type of a pullback. Probably going to take a little bit of time to digest, but we're on the right side of Amazon there as well. Next we have RRC. Let me just zoom this one out a little bit. Okay, we actually call this as a breakout above this level. Opened up significantly lower, so that lower opening on a breakout trade immediately violates the trade, so we're actually doing nothing. And this is the massive importance heading into the day of saying, this is what I expect to happen on the open, and this is the levels that I want to trade it at. And you can clearly see not even close to trading the breakout. Matter of fact, opened up and stayed within this range the whole day. So off the table. Nothing wrong with the trade setup, just didn't trigger. All right, SCTY, Solar City, sticking with that sector. This particular one, we actually saw it break out. To zoom out a little bit further there, we liked the way it was holding above the breakout level. looking for a open at about the same level and then a push through, and we open almost exactly the same level but immediately push down. And again, how significant is that opening price? Look at that. So opens lower, does not trigger, and we do nothing. So nothing wrong with that. I actually had that as one of my better trades today just based on the setup. Didn't follow through. Big deal. All right, Apple, same thing. We were looking for a pullback the day after earnings. We actually did end up opening at or near the previous day's low. Got one push to the upside. Nothing wrong if you would have traded the opening range breakout, which is the 15-minute candle, but it actually never broke through the opening candle, so it really would have never triggered a signal unless you really dropped down to shorter time frames. After that, the rest of the day, pretty much trades below the opening price. The only trade that I could possibly see here that you could have justified wanting to be long is buying a bid of the 2-day low. So pulls back, you're at the 2-day low and looking for a spot to bid, just never end up getting, which that ends up happening right around here earlier in the morning, which you can see here clearly. You actually get a little bit of a bottoming pattern there. Peaks its head above the open and just never followed through. Nothing wrong with that trade. It just didn't follow through, but you know, kind of the squirrely price action you would expect on an FOMC day. Next we have CAM, C-A-M, Cameron International. We're actually looking for this to open lower and test the previous day's low over here, and we kind of got that. It opened a little bit higher, pushed down, never quite got to the previous day's low, but because of the longer term price action, we knew we wanted to be long. Again, sticking with your bias. If you see this doji here, as it pulls back down into support, which is the previous day's low, you absolutely could have justified a bid here around the $53 level with a, let's say, roughly a 35 cent stop. And you look at the nice little clean move you get off of that. Now, what's the important part of that? The fact that this happened in a stock you want it to be long is phenomenal, but what's really more important is you set it up in the game plan that you want it to be long in the first place, and then intraday you set your trade expectations based on follow-through. So the first trade would have been looking for what? A test of the previous day's low. We actually get it right out of the gate. We got a nice 35 cent stop loss, get a clean doji on the 15-minute chart to look for a trade there, and you get that really, really clean price action. Phenomenal trade there, pulled out of CAM. Really, really good setup there right out of the game plan today. Next we have Aetna, A-E-T. And Aetna, actually, we were looking for a breakout. We finally cleared this level. We were looking for an open at or near the previous day's high, and that actually happened. We got the open, but immediately traded lower. So you can clearly see here, based on this breakout level we were looking for, the fact that we traded right back into yesterday's range and we were below the opening price the whole day, off the table, no big deal. Looking for certain triggers, didn't play. Actually, I want to go back to CAM just 1 second, because it actually did something that we mentioned in the meeting this morning. When you start to really pay attention to price action, especially intraday price action, we had mentioned that there tends to be a pattern that the first push of the day can be the high or the low of the day. And you can see right here, very, very clean push off the open. That was the low of the day that led to this move. So pretty clean move there. Next we have Disney. Disney, we were actually looking for the same thing as we looked at a couple of different stocks. Pushed off the lows yesterday. We were looking for today to open in the same area, test the previous day's low, and then look for a rally. We actually did open a little bit lower. It came close, but you can see pretty much the whole day there really wasn't that. But there was no continuation patterns at all, so Disney really wouldn't have been that much to do. IBM, we were looking for some follow-through. We actually got some pretty clean price action. Well, when I say clean price action, I mean what we expected out of the open, which was an open at or near the previous day's low. We were looking for some follow-through to push through, but you can see here, 1, 2, 3, 4, 5, 6, 7 well-bid candles in a row. We have, not in a row, but out of 8, higher highs and higher lows. So maybe a little bit exhausted there. You see it's making new highs and lower volume. So maybe playing itself out a little bit there or saturating it. So we stayed above the open most of the day, got a lower opening, but really never got any pushes, so you probably would not have gotten involved in IBM there during the day. And next we had EOG over 99 as the trigger level, which you can see we happened here. So there's the previous day. Here's today's open. We push up immediately. Coincidentally, just barely take out the previous day's high, but that's why we had the $99 target. We wanted to clear it with confidence. It did not. Second time it finally pushes through there and you get some continuation patterns, so maybe you could have participated in this roughly 75 cent move. But the key here is we had 99 as the target. And you can go right back into the notes and see that based on what happened on the daily charts here. So when you draw that chart at 99, you can clearly see here this opening price action that took out the previous day's low. You would have now got sucker punched there getting long at the previous day's high, which is a very common entry point above yesterday's high. But go to the notes. We had 99. We did not trigger, did not get stopped out in this move down. Ended up getting above 99, closing here in the 15, getting a second candle that closes above there, and it follows through. And then you get the mess from the FOMC in the afternoon. But really, really good setup there at that. It was very important to set your price targets of when you want to get involved. A couple of short sales we had here today on the list was Celgene, CELG. Under 113 was the target, and you can see where we got the 113 here. Here's the open, bounce immediately off the open, and again, you can see first push off the open ends up being the high of the day. We end up reversing, but most of today was inside the previous day, even though we did get below 113. Not really sure I would have got too aggressive with an inside day, even though it did break below the 113. Had struggling getting through the 113, and we were inside yesterday. I would say that's an okay trade if you would have took it when it went back below the open, but not something I would have got massively excited about. I would like to have seen some cleaner moves through that level. Next we have UTX, United Technology. In the list we had below 115, and you can see where we got the 115 from. Let me actually straighten that out. That's where the 115 was, and never got down there. Matter of fact, another inside day looking for a breakout in volatility. So we have an inside day setting up in UTX as well as the support level. So if we break this inside day and break 115, let's actually zoom out and see what kind of room to go we have. That's what we usually. Ooh, look at that. So 115 is a very significant number. If we break the inside candle and break 115, we have some room to go. It looks like down to about 112.75. So keep an eye on that UTX tomorrow. On set alarms for it. Last but not least, we have ACT. We were looking for follow through and a test of the previous day's high. So weak on a big push down. One day bounces back. Let me actually zoom that out. We were looking for a test of the previous day's high and then continue the sell-off. We actually got a test of the previous day's high. We came within 50 cents, which is relatively close for a $289 stock. And we did sell off. We just didn't end up getting followed through. So it actually played out pretty well. This one-day bounce into the previous day's resistance level, push higher, resistance, sell off. We don't get a continuation pattern. We don't even stay below the opening price. But this does turn out $289.50 to $285, $4.50 move just off of what we expected. And again, what we expected was big push down. Yesterday was a reversal. Today we were looking for a test of the previous day's high. Didn't quite get up there, but you can see we got the first push off, and then we sold off. Now, the better trade for the day would have been if we had a flagging or continuation pattern here after this push down below the opening price and then look to test the previous day's low. We just never got it. So if you look to take this short sale on the 2-day high as resistance, nothing wrong with that. If you were looking to sell short here, looking for a bigger move to the downside, I would say that would have been the better trade. It just never triggered. All right, so that's all we got for today. Those were the bullish and bearish ideas in what I would term a little bit more volatile stocks that are filtered by the volume, price, and average true range. Average true range of $1.50 or more. And have a great night. See you tomorrow. Hopefully the market settles in and gives us a little bit better trending days and some clean intraday follow through.